What is the philosophy of selling half your position at double and keeping the other half as free trade versus adding to the trade? Yeah, so I typically only do that with butterflies, and I do that because butterflies statistically don't have a very good shot. Statistically speaking, if you were to Google it or ask other trade alert services, what is their return on invest? What is their win rate? What's their win rate on butterflies? They'll probably tell you somewhere around 15%. And that still can be worth it because of the exponential power of spending 20 cents and making, 300. The way I use them and the way we've been using them for the last 5.5 years is we have about a 40% win rate on butterflies. That's pretty good. But there's still the reason you took the butterfly in the first place, like the Google example. Google pulled back to 238 and, whatever it was, 248 was a level. 250 is a big fat round number. Now I could do that and put it out there, but I need more time, right? Like look what happened, to newbie. So let's just say I go a couple of weeks out and I go here, well, maybe one more week out. And I put that 250 here. It's only five wide. I don't that what are the chances that price last week on say Thursday when it pulled back that 2 weeks from now it's going to land right here at 250? That's like throwing a dart across the parking lot through the open door of the bar, goes past all the patrons, past the bar, past the guy with the cowboy hat, past the girl with the tray in her hands, and hits the two right smack in the middle of the dartboard. Right? That's what doing a butterfly 2 or 3 weeks out can be like when they're narrow. Is like to try to pin it right here. So if I take that trade and between now and then, let's say at the halfway point, let's say they were 40 cents and they're five widers, right? So I get my allocation is, let's just say 900 to 1100, but on butterflies, it's going to be a quarter of that. So I'm not spending more than 250 on flies, right? So I could get six of them. So I've got $240, small investment. I could care less what happens. But between now and then, it doubles. And so now they're worth 80 cents or 90 cents. Let's say they're worth like 90 cents. Well, if I sold half of them at 90 cents and get 270, I'm up 30 bucks, commissions paid for, and I still have three flies to see if it, it'll get there. And what that I can then do is if I hit certain levels and breach certain levels, test, retest, and now it's going higher. Now what I can do is do now I can put on a whatever. I can buy the 250, 252, 257 vertical for that week. I can now add to the trade. But when I have such a low probability of flies, if my flies are ever worth in a volatile market, right? They're worth 2x, 3x. Typically, I like take half of them off and let the others run for free. Why not? But what you're saying is why not add? Yeah, you could add to the trade at that point, or wait another day or two just to make sure that you get what you need. It's just a it's just a good way to I like using butterflies to put my toe in the water, so it's a good way to just to test, keep it on the board. I won't forget about like AMD. I've already forgotten about AMD. What reminds me of of AMD in terms of a potential trade to the downside? Oh yeah, I got that butterfly on there. Oh crap. Well, that butterfly didn't work because I put the butterfly down here at 200, 202, or somewhere around here. Now, this still could work, but I'm probably not going to lean into the trade to the downside until price gets below the 20 or the 50. But in the meantime, I want it up on my board and I don't mind investing a little bit just to see if I can get a move down to the mean. If I get a move down to the mean, the butterfly will double. I'll make my money. And then after a break of that level and a retest, then I can add. So it's just like it's doing it in stages. What trigger would you use to buy calls on the VIX? I don't really need a trigger to buy calls on the VIX. If the VIX starts to show whether it's in compression or starts to, show that it, or let me take that back. If it has some compression and it looks like it's bubbling away, the trigger isn't necessarily on the VIX. The trigger could be some news, some geopolitical stuff. It could be market data that came out. It could be the yields moving, which maybe indicates that there's some trouble in paradise. It could be the dollar moving. So I don't really need a trigger. Um, if my overall sense of the market weather is significant move to the downside is possible, then I usually throw on some VIX calls because they're super cheap. So why not participate in that move? I also will look at the volume of the calls and see, are investors leaning in? So that's really the better, what you call a trigger. I would just call more proof that investor sentiment is heading for the door. So here, let's look at that. We'll make this the last question, okay? So this would be next week's. There's some action. I mean, there's definitely action, right? I mean, look, here's the 23s. 12,000 came in, another 15,000, 20,000. Look, there's 200,000 at 25. That's for next week. Look at this, 134,000, 164,000, 200,000 here at 35. Sound like an auctioneer. There's more. Look, there's more. I mean, it's insane, right? Look at the 40 strike, 117,000. Look at this at 60. There's 200,000 calls at the 60 strike. At 100, VIX 100, there's 100,000 call options. Yeah, and I got some in there. I definitely have some in there. So they're inexpensive. Like if you wanted to buy the 40s right now for next week, and for some reason you thought the markets were going to have a two standard deviation going into the next week or two, you could buy the 40s right now for what? 26 cents? Small aloe. Get four of them, spend $1. But if they 3x, you make $300. If the market rolls over, that's a nice little piece of change to help mitigate. Well, I bought a Google butterfly and it cost me $2.30 and I ain't making any money. If the price goes up, maybe I can double my money. If it doesn't, I'm going to lose that. Well, then hedge it with some of that. Maybe not that much, maybe two or three. Oh yeah, if you're way out of the money and you get a spike in the VIX, oh yeah, you'll get you can get 5x, 6x, 8x on a 40 call. Oh yeah, because the premium explodes. So I'll show you what I mean. Here, just look at this for a second. So if you had bought when the VIX was at, say, here, it's at 20 now, right? So how about when the VIX was at when the VIX was at like 16 and you bought the 20 calls? When it was at 16, you probably only had to pay 15 cents for it or 20 cents for the 20 calls, maybe a couple of weeks ago, right? Look what the 20 calls are worth now. They're worth $2. That's a 10x. If you had bought the 20 calls a couple of weeks ago, they're worth $2 now. Even if they were worth 50 cents back then, that's still a 4x. But you have to understand that trading the VIX is very difficult because the markets could just rally and these will just expire worthless. And there's another bit of money that you put into a trade that did not work. So, just a few little pieces of advice. Only trade the VIX not, if there is an inclination that the markets could potentially sell off, there's evidence of it in somewhere, somehow. And secondly, you allocate like 25% of your normal allo.
Thanks for watching. Hope you enjoyed this video from Trade With Me Now. Make sure to go ahead and like this video and subscribe to our channel so you make sure that you catch our next video right when it's released. Also, if you have a question or comment, please leave that in the comments section below. And of course, if you want to learn more about Trade With Me Now or join our community of profitable traders, go to tradewithmenow.com. There's also a link in the description below.